All right, so let's dig into Sanofi's second quarter 2025 earnings. This one was, well, it was a real head-scratcher. On the surface, the numbers looked like an absolute home run, but the market's reaction, it told a completely different story. It's a fascinating paradox, and that's what we're going to unravel today.
Okay, check this out, because this slide really says it all. On one hand, you have the actual business performance, sales growth of over 10%. Fantastic, right? They even raised their outlook for the full year. But then, you look at the market's reaction. The stock got absolutely hammered, dropping more than 7% on some pretty heavy volume. So what gives?
And that really is the million-dollar question for us today. What did the smart money see that was hiding behind those really strong top-line numbers? Something clearly spooked Wall Street in a big way, and that's exactly what we're going to break down.
But first, let's give credit where it's due and look at the good news. I mean, we have to understand where all that growth is coming from. And it's not just one thing. Sanofi is really being powered by a potent dual engine right now.
And engine number one is, no surprise here, the juggernaut that is Dupixent. The power of this drug is just staggering. Sales shot up over 21% to a massive 3.8 billion euros for just the quarter. This thing is an absolute monster. It's expanding into new areas like COPD, and management is still aiming for an incredible 22 billion euros in sales by 2030.
But here's the thing. Sanofi is proving they're not a one-trick pony anymore. They've been building out what they call a second growth leg, and we're seeing the proof. Their 9 newest medicines and vaccines just pulled in nearly €1 billion this quarter. Think about that. These new products are already a full 10% of total company sales. That's a huge step.
And we can't forget about the vaccines unit. It put up a very solid 10.3% growth. A lot of this was driven by the global rollout of Beyfortus, their RSV drug, and it also got a nice little boost from the timing of flu season. It's just a steady, reliable contributor to the story.
So, to kind of put a bow on this whole top-line story, just look at this chart. Those new products we were just talking about, they made up nearly a quarter of the entire quarter's growth. This shows that their big strategy, to build a portfolio of hits beyond Dupixent, it's actually working. So far, so good, right?
But that strong top line is only half the story. Now we get to why the market reacted so badly. This is where everything turns. Because despite those fantastic sales, if you look at the profitability, you start to see the cracks that had investors racing for the exits.
And here it is, a drop of 210 basis points in their business operating income margin. It fell all the way from 26.7% down to 24.6%. For the market, this decline in profit quality was the first major red flag. They're making more money, sure, but each dollar of sales is less profitable today than it was a year ago. That's not a trend you want to see.
And just so we're all on the same page, this boy thing, it's Sanofi's custom metric. It's how they track the core operational health of the business. So when this number weakens, it tells investors that the fundamental profitability engine is under pressure, even if sales look like they're booming.
Now this explains the ticking clock that sophisticated investors are laser-focused on. Right now, Sanofi gets some money back from its partner Regeneron for past R&D costs, but that payback ends at the end of 2026. And when it does, it'll create a €300 million profit hit. Then, in 2027, the full impact lands, an €800 million hit. You add that up, and that's a massive €1.1 billion profit headwind that is locked in, it's coming, and the market is pricing that in today.
So why would Sanofi just let its margins get squeezed like this? Well, it's not happening by accident. It's a deliberate, really high-stakes investment in a long-term transformation. Basically, they are betting the house on becoming a pure-play biopharma powerhouse.
And this isn't just talk. They are actively moving huge amounts of cash around. They sold off their consumer health business for about €11 billion and then immediately turned around to spend $9.5 billion on blueprint medicines to beef up their immunology pipeline. This is a crystal clear shift away from lower margin businesses and into high-risk, high-reward R&D.
And this timeline here shows us exactly what they're paying for. The next 18 months are absolutely packed with critical, make-or-break events. Data readouts for these potential blockbusters will either prove this massive spending spree was brilliant and send the stock soaring, or they'll fail and raise some very serious questions about the entire strategy.
Management is being very clear about the timeline here. Sanofi's own head of R&D is basically telling investors directly, this is a long game. It's a 5 to 7 year journey, and right now, we are in the most expensive, most uncertain part of it.
This whole thing requires a lot of patience.
So how do we put all this together? Well, that brings us to our final segment, the next call. Let's synthesize the good and the bad to really understand the core debate and see how we might think about the stock going forward.
It all comes down to this fundamental split. The bulls see the dominant growth, the deep pipeline, and they believe this big pivot is absolutely the right long-term move. But the bears, they just can't look past the eroding margins, that guaranteed billion-euro profit hit from Regeneron, and the simple fact that this R&D transformation is super costly and super risky. And honestly, both sides have a really valid point.
So what's the takeaway? Well, with two powerful opposing forces at play, the most plausible outcome might just be a big move in either direction. So a potential way to position for that is something like a long straddle, using options that expire out in December 2026. This strategy is a pure bet on volatility. You profit if the stock makes a massive move, either up or down by that deadline. It's a way to bet on the outcome being decisive without having to predict the direction.
And of course, this is not financial advice.